If not, the last one should be pretty easy based on all of those past two we did. Now we're looking at a 5-year pullback, similar to the 1 year, but now we're talking about a 5-year. So all of this is going to be pretty equal. With this one, we're looking at the state 2, target 3 again, and we're looking at the correlation with the SPX, except now still 85% correlated, but we're looking at a 5-year, which comes out to be 1,260 trading days. And again, state 2, target 3 has to be met on that day. Correlation is the same. So here we're looking on April 1st, I found Shopify. So April 1st, Shopify was 86% correlated. So we can look, I did the same test as before, except having the 252 days, I used 1,260 days. So we can see Shopify here, 86% correlated. Also, as a side note, this is a screener that we use for the studies, but if you know that you want it to be 95% correlated to the SPX, you can do that. You can just change this data set or that number there, and we can see there's already a couple here. Stryker Corporation, 97% correlated. Sony Corp, 96% correlated. So you can do that. TMO, Thermo Fisher, 95%. So you can sort out and reduce this number dramatically by being more selective. But again, not only does the correlation have to be met on that day, but my targets within state modeling have to be met as well. Correlation for the 5-year, a little more drawn out, but I wanted to kind of give you an example. This is Shopify here, probably when it first started out, I guess, or the graph doesn't look that well, but we can see, you know, it's sloping up, and then we can see these little dips here coming about in the market. That's in September 19, so we can see September 19, a little bitty dips here, and then obviously the big dip in the S&P, and then this kind of dip in here on Shopify. State modeling we talked about. So again, on April 1st, my date here is in yellow. State 2, target 3 of 401.73 was met. We can see it came through and broke through there. It actually went to 381, and my target 3 was 401. So it went down another 20 bucks or so. Shopify come up again on April 1st. Here's my signal. Another side note too is that when you're in the studies and you're looking at these high probability wins, you can always click on this bar comes up as a link in your platform, and you can click on that, and that will show you the indicators or the signals that were used to create this one master signal. So if you are always confused of what this might be, you can click on it. It'll say, hey, 5-year is 1,260 trading days plus your state 2 target 3 has to be met for those days, and it also shows you the symbols that we use to run that test on, or that stock list, if you will. We can see all the information here, Shopify, our target prices, and then the correlation as well. If I click on the X, we're buying the June 465 call for 20 bucks. So we can see the cost is going to be $2,000. So this is a great example of doing this trade and saying, I like this trade, and then taking a trade on the other one like I talked about for $1.18. Hugely different risk amounts. So you want to try to make sure you're keeping those, pretty close, or as close as you can, to kind of flatten out your results and make your results be apples for apples. So we can go to the results. So we're looking at the long call results for Shopify. April 1st, we bought the June 465 call. Stock was at 384. On 4/8, stock was at 414, so it jumped up. And we sold the option for $27.55. We were able to make the $750 profit. As you can see, it must have had a spike up on that day, but obviously, 25% would be roughly 500 bucks. It jumped up, and we were able to take a little more profit by the end of the day. Intraday could be a little bit different, but that's why it's good sometimes to have those GTCs or kind of watch the order as it comes about. Bull call, similar, April 1st, we bought the 275, 385 call spread. We paid 7,400 bucks for it. Again, a big amount of risk. So if that risk is too much for your account, then either try to adjust the parameters and still make sure the back test is valid, or just might be a trade that you want to pass on. We bought, again, the 275, 385 call spread on April 14th. We actually sold it, and we sold it for a $22.70 profit. And then we can also see here, I don't think I mentioned it before, we buy this in state 2 when target 3 has been met, and then you can see we got out when it was in state 1. So it shows you the state on entry and the state on exit. And then also a pretty cool feature too, we got your lower break-evens and your upper break-evens here. Typically on these trades, it's pretty standard on your long calls, bull call spreads, but on other strategies, you can see that differently. Here on our bull put, we can see we sold it for 190 on April 1st, and then on 4/22 we were able to get out and collect a 157 profit. We sold the 275, 265 put spread. We collected the 190. It's a 10-point spread, so $1,000 max risk. So max risk was 1,000 minus our max profit, which is the credit we received, equals your actual risk, which is $810. And then it shows you all that information, so we're good. Here's your strategy results for the 5-year correlation. Again, you can see a nice sloping graph, $55,000 in profit, 2.35 profit factor, 79% win rate, 20 days on average in trade. Your bull call spread, again, a nice slope besides this dip here in the beginning of the year, but we're talking about 3.15 profit factor with an 84% win rate. And then your bull put, 94% win rate, which is great. And you can see even on this dip, we didn't even go below in red, which is great as well. 31 days average, you're in the trade, 2.89 profit factor. So I think that's all I had for the 5-year and for all the studies, and we covered all of them pretty quickly. But any questions, please feel free to email us on those. Again, we have them in the resources page. I'll show you some information on that. But if you have any questions in the chat, feel free to put them in there now. Otherwise, I'll show you some of the resources that we have, and you guys can go to those at a later time as well.